Good afternoon, traders. Good morning if you're just waking up, if you're in Latin America or North America, or even you're a lazy bones in Europe. It's 20 past 11. Oh, it's 18 minutes past 1 here in the UK. It's 20 past 3 in the Eastern Mediterranean, where a lot of my colleagues are, and it's quarter past 12 in the Frankfurt Center of German trading this morning. It's been relatively quiet this morning. Dollar's come back a wee bit. You can see this on the dollar CAD chart here. This is the hourly chart for dollar CAD. We got retail sales coming up in a minute. Let me just bring in the calendar. We got Canadian retail sales coming up in a minute. A very successful, many would say, visit by President Trump to the UK. A $10 billion deals produced. I mean, they're talking about 300. It's 300 million billion that we're talking about yesterday. I was making some notes at the press conference yesterday. Yeah, 200 billion pounds. Trump called it 350 billion. Both way trade deals with between the UK and the US. The UK buying lots of i.e. AI infrastructure, hardware stuff, and obviously it was that huge deal yesterday where Nvidia and Jensen Huang, who was actually with the president in London, his company Nvidia has invested 5 billion into the struggling Intel, their big competitor. Remember, Intel, major or used to be the leading chip maker globally for PCs and servers, and server farms have been superseded hugely by the technology Nvidia have put together. Nvidia is very much the hot stock of the last 2 or 3 years, and they've come in as a white knight to save the struggling Intel. New CEO in Intel was very much under the cosh and initially from the president, but he went and met the president, and they're getting on like a house on fire now. It's as is Mr. Trump's way, President Trump's way. Later today, a significant announcement with regards TikTok is expected. President Xi from China has taken a call from President Trump as he's back in Washington. And stock markets, if I just bring up the stock markets, went to all-time highs again yesterday. We're down a bit at the moment. If we just look at the S&P 500, this new chart is doing my head in. Anyway, let's go to the 4-hour chart and see the overall trend is very much to the upside. So yesterday, yesterday morning, we touched all-time highs up here, 6,660. We closed on an end of day basis up again yesterday, a very smart marginal increase yesterday for the S&P 500. The NASDAQ was also at new all-time highs yesterday. We went up here to 24,550. And we're currently trading at 24,500, just shy of that at the moment here on NASDAQ. And the Dow, which we have got an open position on from the other night, is also in the money. That's our entry here. It's at 46,037. Our stop loss is at 45,703. That's the daily chart. That's the new all-time high. And obviously our trade locker data isn't updating, but what can I say? But yeah, it remains bid on the upside time frame. So enthusiasm around the data. Obviously the cut this week we've seen from the central bank, the Fed. But it was quite interesting to listen to. As I said yesterday, listen to Powell's speech and not speech, but his the press conference. He was much more coy, as I think I said yesterday, about the path going forward. I think he was quite pleased that the committee stayed together, save obviously the new guy, Professor Stephen Mirren, the implant from the administration. Remember, he's a member of the government, and his boss, Mr. Trump, wants very quick and significant interest rate cuts. So he voted, understandably, for a 50 basis point cut. Chris Waller didn't. He stayed with the majority. So as I said yesterday, his chances of succeeding and he said Jay Leno. Then all talk shows have been very much in focus, haven't they? Jay Powell, as Fed of the chair, is virtually negligible now, as he didn't follow the mantra coming out of Washington, but out of the White House administration. But anyway, dollar CAD up for its third consecutive day. Let's have a look what the Canadian retail sales look like in a minute, in 8 minutes, in fact. We've had some some quite mixed news out of Canada. We had also the Bank of Canada meeting. I'm sure you're aware on Wednesday, cutting rates there as well, but 2.5% they went to. If we just bring in the calendar for the week. If I just put the filters on, because it doesn't seem to want to keep any of my filters. It's by its very nature, there's lots of countries in there. Not really. Let's take Spain off there. South Africa, all due respect. Singapore, those I can see. South Korea. Not really market moving data that comes out there. So the Canadians also inflation in line. Bit tighter, 2.6%. Some of the detail was quite okay. Retail sales positive for the US on Tuesday. Wednesday was the interest rate announcement from both central banks. Bank of Canada moving by 25 basis points, but down to 2.5. We are still at 4.25 for the Fed. Big difference there, big differential. But as you can see on the chart, how weak can the dollar get? That's the chatter that's starting now. So if we look at this, go to the weekly chart. I don't know how far back this is going to go now. You can see the dollar's been recovering against the pressure on the Canadians to do some sort of further deal. Have been hit with the tariffs from Trump. Obviously, the nonsense he was talking about Canada becoming the 51st state hasn't been mentioned in messages for a while. But as you can see here, the dollar remains weak against the Canadian dollar. This is the 50 period moving average here on the weekly chart. So we've been under this key indicator since April. So since the beginning of the spring, and here we are into the beginning of the autumn. Dollar CAD still is in a downtrend. We've ticked up since the depths of beginning of June, on the middle of June, where we went down to 135.50, and we're back up to 138.25. So we're moving higher, but still capped to the downside. The daily time frame looks relatively positive for the dollar. I say this 3-day rally we've seen since Wednesday, since Tuesday's low, a bit of a tweezer bottom there, bounce, and then back over the 50-day moving average yesterday and moving ahead today. So it's another bounce. We had this other bounce here at the beginning of the month. So 50-day playing key there. So many technical positions would have taken long positions there. We were long dollar CAD last night. We were actually long dollar yen last night, JPY, and short Kiwi, the two trades we took last night, obviously ahead of the bit risky, many were saying yesterday, and obviously we came right down within a smidge of stop loss this morning following the Bank of Canada's the Bank of Japan's no change policy. It certainly has been central bank week, but there was some sort of hawkish tones from the Bank of Japan this morning. Two members of the board dissented. Udia's, I haven't actually seen Udia's, the governor of the Bank of Japan. I haven't actually seen his speech this morning or seen any recordings. I've been away from the screens this morning. But as you can see, the yen improved quite significantly against the dollar here as the announcement came out, this hawkish tone. But again, the 50-hour moving average kept you held. We didn't break it, and we've been over it now since the 17th, down that 1 hour, 17th at 8 o'clock into the close. And here we are 2 days later, we're still above it. So we're struggling to get over 148, but that was enough to trigger a long position for us last night. So we're out of the money, and now we're back. Now we are in the money. Our first target is up here, about 40 points to the upside. Whether we get that today or not, we'll see. But that's still looking, we've got a little trend line there positively on an intraday basis today. Let's put that in. it's not going to last very long because this system is currently driving me mad and not letting me have any lines or many lines. It'll somebody say, can't keep all your lines, mister. But that's our hourly trend line this morning. It was moving up our tops here, so we're trending higher. So we'll see if that first target gets hit. But as you can see, we struggled to hold over 148, except in this last hour where we've pushed higher. And the other position we had last night, which while we're on them while we're here, was the Kiwi, which was short. So we were sort of long the dollar on both those positions from last night here. And that one is sort of, again, there's our stop loss up here. I think I pulled that down earlier, didn't I? 52. I think it was much higher than that. I'm sure I pulled that down earlier. And reluctant to get below the low. We got to, on European Open this morning, rallied back up to entry, but still moving down. I might pull that down as it's Friday. I might pull the stop loss down to the 50-hour moving average there, to the downside. Targets there, 58.40. We've been in and out of this one this week. We were long, but then we were short. But this is now moving down, and we're in the money on that one. So the two from last night are in the money. A huge move there. Obviously, this strategy itself on this 4-hour strategy would have still been long there. The blue have disappeared there. Whether you wouldn't have got in there, you would have got in there. You see the crosses happen there on this huge volumed candle last night ahead of, so that would have gone short there at 59.53, and then you would have added, or you could have added, this is how this strategy works, a significant break there of the 4-hour 50 period moving average there. So on the conclusion of that candle, you could have added a second position, and then obviously just trailing your stop loss down for the rest of the day. We didn't actually get in till here later on in the day yesterday, but that was the day before yesterday. It's a big move down yesterday for the Kiwi, and it's back under the 4-hour 50 period moving average. We look at the daily time frame, it's come back down. Quite huge move down yesterday. Kiwi was a big culprit, big hit yesterday. So down we go again. Guys, if there's anything you want to have a look at, let me know. 130 is in, so the retail sales from the US, from Canada will be in 1.9% last month. A negative core of 0.4 of 1% and 0.8 of 1% for the headline for Canadian retail sales. And we'll see what the August number looks like as well. The preliminary is about to drop as well. So 2 lots, actually. Nothing else for the rest of the day today. As I say, no change from the Bank of Canada. UK retail sales were better than expected in August. That's the good weather we've had here in the UK. People have been out. But unfortunately, the July numbers were revised down, and dollar against the pound. I'll come back to CAD in a minute. I'm not sure you remember your trading dollar CAD. If we come back to the pound USD is our biggest mover today of the major currencies. That's the daily, again, a bit like the Canadian dollar, 3 days down on this one. So 3 days to the good for the dollar index. So this rally we had on Wednesday post-Fed, 137.25, and we're back down now to 134.60. Right, again, right on the 50-day moving average. So we're at a key level. We're under the hugely significant 135 level as well here on the daily time frame. I kind of all my lines have been removed, unfortunately. This system. Let's put those at 2. See what it states for. You get 135. So big round number. We've breached that today. That's on the order of the weak retail sales from the UK, and it's sort of, well, let's start buying some more dollars again. So we've got 3 days here. You can see this moving around. So the dollar cable, the cable rate is the biggest mover today. So that's the daily candle. Look at the hourly candle. Just continued to unwind from last night. So last night's 7 o'clock candle, and then down we go at lunchtime yesterday, and then down here on the retail sales in the UK into 135. 1, 2, 3, 4, 5 hours. 1, 2, 3, 4 hours sideways. through the European Open, and now moving lower as the US traders get behind their desks and moving down on quite significant volumes as well. See, the big volumes have coincided with big moves to the downside, so the pressure is very much on selling sterling back, cashing some profits, and this mantra of the dollar's gone low enough. How long that's going to run for, we'll see. But it didn't last time, but we'll see how far it goes this time. So we've got a couple of days again of dollar improvement, given the back of what Powell was sort of indicating, that we're not rushing into cut rates. Myron's the outlier, but it might change next meeting. But October is it's the end of October. It's quite a long way away. So see how all that pans out as well. So let's have a look at the Canadian dollar again, following the retail sales data that's come out, dollar CAD. As you can see, it's a stronger dollar today. So dollar up in the last hour and also up in the current hour, 138.20. So 138's been breached today. And if you were trading this on the data, it's just continued to tick higher, hasn't it? Nothing too exciting about that. 5-minute traders here would have been long here. You want to trade this one on using this strategy, would have been strong there. Remember, with this strategy, we're looking for a cross of the MACD and the signal line from your MACD. MACD set at an absolutely standard setting, nothing too clever about it. 12, 26, and 9. We're looking for a cross of the two lines. That's the leading indicator, and then you're looking for the parabolic SAR to have flipped or to flip thereafter. Normally, the parabolic SAR leads, and the parabolic SAR leads, and the MACD follows. But the MACD is the first signal we're looking for. So you can see here the blues cross from below to above the orange lines. A minor little blip there, but we were still under the 50. So that was, that had been short. See, there we are. So that's the last cross there. So that would have been short at that one, using this on this short-term 5-minute basis, and it's gone under the 50. So you might have added extra on the confirmation of that in the following 2 or 3 candles. And down we got, but went back up, 50 held. That cross didn't work. Didn't actually cross. So it sort of smidged into it and smidged off it. That's a clear break and a cross here on that candle there. And then this candle here is a big confirmation as it's gone through the 50 period moving average. And you would have added again there, stop loss down on the turn of the entry. So you'd have got in here and here. Stop loss initially down there. Stop loss for this under that candle there. And now we've moved it up. Stop loss there initially. Stop loss now there. And if you're being a bit brave, you might want to stop loss at the bottom of currently at the bottom of that wick there, just ahead of the data, if you wanted to hold this against the data, but it's moved up. So again, dollar CAD, that 5-minute strategy, on the 5-minute time frame, a positive trade there with our MACD and parabolic SAR setup. So yeah, let's just look at the details of what the Canadian data has looked like. It's going to go all the way back again, isn't it? Let's ask if it will do. It's got all so much stuff. I didn't want to see where we are. Friday, core sales, so very much weaker than expected, minus 1.2% for July. But ironically, the preliminary reading for August is actually better than expected, from a negative 0.8 of 1% to 1% for the headline, and the headline for July has been confirmed at minus 8 of 1%, from a upgrade. So it's very choppy again there, to 1.6% from 1.5%. And July, the core was upgraded to 2.2% from 1.9%. But the July reading for the month has been downgraded. So it's very sort of a mixed picture there as far as retailers are concerned in Canada. Some tariff impacts potentially. Remember that obviously the Canadians have this North America trade agreement with the United States and Mexico, and a lot of the tariffs, a lot of the goods are actually part of that deal and not part of the tariffed steel and aluminium, which is so core to the car businesses from both countries into and out of the United States. It was causing so much friction when they was first announced. So, still a bit of a headache for Mr. Carney and the members of the Bank of Canada as well. But mixed data. Looney, sort of from the Looney's point of view, it got very strong against the dollar. If we look at the weekly chart on this, we saw earlier, it improved very, very significantly this year. From this, that's the beginning of this is the weekly chart. Remember, dollar CAD, and this is the beginning of January. January started around here, so we were all the way up there, 144. We went to 148. 140. I thought we got $148 CAD. No, 147.50. Dollar was very much in the front foot at the beginning of the year, and then it's sort of the dollar's weakened all the way back to where we were pre-election time back in September. So, but dollar's come back in the last few months, as you can see here, but very, very gradually, and that's more to do with weakness in the dollar CAD. And as you can see there here on the weekly time frame, again. Lots of people. I know people that just trade weekly charts and swing traders and hang around for age. It's not my bag. They're still long there from this using this strategy on the weekly time frame. It's under the 50 period moving average, so it's still relatively weak, but that was quite a strong candle they got in on at the end of July. So they've been long all of August and all of September so far. Got their stop loss a bit too close. It might have been stopped out a couple of weeks ago, but their stop loss will be down there at 137.25, and a sort of flat week so far again, but still long. Those sort of traders too slow, and not much trading going on when you're trading that. But you can see here today, Canadian dollar weakening again, 138.20. So we're up 20 pips above the key, 138. So that mixed retail sales data weighing on the Loonie. I say that's the main data of the day. Obviously, we got the futures CFTC speculative positions, the big brokers and the small brokers and all sorts of assets later tonight to come. Don't forget that. It's key where the real skin in the game is as of Tuesday. So it's ahead of what the Fed announcement. So obviously things will have changed since then, but it's still, as a weekly post of where the real cash is, the real positions are, the real speculators are. The CFTC data that comes out every Friday night is key, no matter what you're trading. As you can see there, from soybeans to silver to wheat to all the forex crosses. So obviously keep an eye on that if you're looking for speculative positions and long-term positions. So while we've got the calendar up, let's just have a look at next week. Next week is the final full trading week of September. There are a few days into the following week as you can see here, September. It's the 21st to the 26th, the final full week. But there's, as I say, there's a couple of days of the following week. So it's been quite a long month, 4 full weeks plus a few days. And I just check the filter, put the filters on the. I'll just make them. I don't think there's actually any. So the 3 bull high impact events. These are the events. If you've got a standard account, remember, guys, you can't trade or open a new position or close a position that you've opened in that 4-minute window, both 2 minutes before the event and 2 minutes after. If you've got a position that you've opened beforehand, it's all right to close it in there. But next week, relatively quiet, as you can see, and no big event on Monday. It is the autumn equinox being balanced. So the September the 22nd is the autumn equinox, when there's 12 hours of daylight and 12 hours of darkness here in London around the prime meridian. And as we move into the winter months, as October looms its head ahead, and we come to the end of the third quarter. And then we got October, November, December, the final fourth quarter of the year to get through. So PMI data from the United States on Tuesday, the 23rd, is the highlight. New home sales from the United States on Wednesday, the 24th. Durable goods, GDP, and the ever important initial claims, weekly claims, on Thursday. And then the key event, as far as inflation watchers and the Fed are concerned, the core PCE price index, the final Friday of the month, 26th. And again, many people will be wrapping up their September portfolios, and therefore their third quarter portfolios on that Friday next week as well. So volatility might start to increase towards the end of next week, particularly if there's a surprise from GDP or the claims or durable goods as well, could be an indicator. New homes remain, well, not new homes. New homes still look quite strong at 650,000, but the home sector is very much under the cosh in the US. Some particular weak pockets. We've had a big, massive drawdown last week as well on the inventories for the oil market. So not a massive news week compared to obviously the blockbuster we've had this week of the central banks and the Fed finally moving, but still plenty of things to get your teeth into next week. I'm actually away Tuesday and Wednesday next week, 23rd and 24th. I'll be back with you on probably the most important day of the week anyway, the 25th, where we've got the durable goods, the GDP and claims. And we've also got, it's not really going to move markets really, the SNB. But remember, the Swiss National Bank, one of those big interventionist banks, and not afraid to tell it how it is. Inflation has been ticking up there. Deflation was a worry at one point, and we'll see what the gang from Switzerland have got to say on Thursday. Chatter about negative interest rates again. Hold behold, we'll see what happens. They stepped away from it last time. No expected change from the guys in Switzerland on Thursday, but a big day on Thursday. So I'll see you all again then. I'll be with you on Monday as well. But I say I'm away Tuesday, Wednesday. So final week. Just bear that in mind. End of the week, obviously on Friday the 26th. End of the quarter for many. Some might run it over to the following 2 days. But lots of people, there'll be a significant amount of people closing their September books on the 26th. I'm probably going to be one of them. So anyway, that's next week. So let's have a look what's going on at the moment. So dollar is the best of the major currencies this morning, still followed by the yen and the CAD, and the pound is the weakest, and the Kiwi is the other weak one so far today. So dollar CAD trading at 138.20. And let's just go back to the major forexes while we're here. So USD. Let's go down them in order. Swissy 79.60, so still significantly under the .80 level. You can see the dollar coming back against the Swiss franc, but we're still under .80. So that on the daily time frame, we're still weak. The 50-day sits here at 80.14. The 20 is probably around about here. Might be testing that as we go forward. Let me just add another moving average and put the 21 in as well. Moving average. I'll make it that's blue line. I don't want that. Settings. Input. I want the 21. Call it 21. I want the EMA. I want an EMA. Oh, it's a moving. It's EMA done. I don't want. Let's get rid of that. Remove. Put the EM. Just want EMA. I don't know. Address. There we are. Settings. Make it out the 21 is what I want. 21. Let's make it. Purple. Make it thick one. There we are. So there's the 21. There we are. So there's the 21 EMA to be tested. So as I thought, just around about the parabolic zone, but still, they're the daily, as we've seen this week since Wednesday, and the less hawkish Powell as was expected. So the dollars come back and we're on our third day up. So we need to break. If the dollar is going to come back against the Swiss franc, it needs to break 0.80 significantly, but also 0.7970, which is where the 21 EMA is, and then the 50 moving average sits above the 0.80 area. So there's a big, thick wall of resistance there, as you can see with those candles there in the Swiss. We'll have a similar pattern here for the others. So dollar yen we had a look at earlier. Say we were long this one. We're in the money on this one, and again, but see here, these two have been cancelling each other out for well, as you can see there, for days. We've just been chuntering around this 148 area in the channel bound. So we were enough yet. The strength of the move yesterday was enough to say we're going to test and break out at the top of the channel. So we got in here, and that's our first 50 pip target. So we need to break over there. But you can see here, the dollar's up against the weaker yen above its 20 and its 50-day moving average. Dollar CAD we just had a look at, and again there over its 20-day moving average there, and its third day up. Euro also surprisingly over its 20-day moving average. I didn't realize that had happened earlier in the week. Sorry, it's not over. That's the other way around, isn't it? Euro. So the euro remains bid and again supported. So it's come, although it's got 3 days down. And yesterday, earlier in the week on Wednesday, we did go over 119. We're still at relative 4-year highs. If we just, I'm not sure it's going to show you all the way back with this. Oh, it is for some reason. No, it isn't. Yes, it is. So this is September 2021, October 2021. Last time we were at 119. And there's that, there's 119, that top one here. Back in August 2021. So over 4 years high, we got to this week, got the hourly chart, and we still remain, the daily. We still remain bid, but we, testing a key area this morning, and now 117.25. So if that breaks into the end of the day, we may see a test back under 117, and then the 50-day moving average sits there at 116.60. So they're the three big lines in the sand for euro dollar traders, having had a third day of weakness today. Australian dollar was one of the best performing against the US dollar. You see here, had a great start to the September, but again, turn around on Powell's words, basically from the press conference, was the key thing that moves down. We moved down again yesterday, and now we're right in the Aussie, as they're very much on their weekend already. Australian traders right on the 21 EMA. Will it hold? Will it not hold? Nothing significant's going to happen, I wouldn't guess, before that daily candle close out. But let's see what it looks like at the end of the day before we make a mind up. Aussie performing about as well as the Swiss franc today. So again, 3 days down following what Jay Powell had to say. In sterling, we've already looked at under the key 135, under the 20-day, and banging right into the 50-day moving average. So using the 50-day moving average as our indicator, you can see the weaker currencies and the ones that the dollar's doing better against. Sterling having a particularly bad day today, and Kiwi, the one we were short from last night, having breached under the 50 and the 20-day yesterday. Huge down day, and there we are, still in the money from our entry from last night. Our target's down here at 58.40. So that's the major Forex crosses as we go. So dollars had a good end to the week, thanks to Mr. Powell. Elsewhere, indices we've looked at already got to all-time highs, down a bit today. The only skin in the game we have at the moment is the Dow, which went long the other night, and we're still, there's our entry, there's our stop loss. Nothing's really changed there. And again, you see it still remained very, very bid. And it was only yesterday we got new intraday all-time high. So stocks still holding up, but they are probably due a bit of a correction at least. As I said this time last week, the second 2 weeks of September, the second half of September is traditionally quite volatile. So the volatility, which we haven't seen this week, particularly the trend continues up. We had a bit of a worry, a move on Wednesday following Powell, but stocks remain, shook that off yesterday, moved higher again. And the news, the flow, backed by the administration, I think that news yesterday regarding NVIDIA's investment in Intel, I think something like, I think there was somebody who was saying yesterday the US government is the third biggest shareholder in Intel now, seeing it as a core resource, and Nvidia, investing in a major competitor, perhaps wanting to get into the, I don't know, the PC chips. You can't imagine that, but maybe the mobile chips or something. We'll see where it all goes forward. But certainly Nvidia can do no wrong. At the moment, as far as the markets are concerned, so stock markets continue to rack higher. And finally, everyone's favorite asset, it is the favorite asset here at theproptrade.com. Gold currently trading at 3647, so just shy of 3,650. This is the daily time frame for gold, so a new all-time high on Wednesday ahead of Mr. Powell at 3,700 was breached. 3,600 was still $50 above that, so a massive move we've seen during August and September for gold continues intact. And again, that consolidation we had at this level where we're back down to now 3,600, is that where we're back to? So this might be the top in, but who knows? It's far too early to call, and that remains bid. But interestingly, technically, for the first time since the 26th of August, the parabolic SAR has flipped to above. That's one indicator. That's all it is one indicator. Okay, so we're into our second day of a parabolic SAR above the price action. The MACD signal and the MACD line and the signal line coming together, whether they cross or not, whether they touch and bounce off, we'll see in the coming days. But the sign of the top possibly being in, probably too early to tell, really. There's no, that's, it's a difficult one, isn't it? And that's still, in convergence, big strong rally. But that was the signs we saw, didn't we? We saw this movement down, and then a lot going on. I was getting very frustrated with it. Sort of more than made up for it for the September rally in the gold market. So it's still bid. The worries about inflation won't go away. There's been a bit more of a selling of this rally as we come to the at the end of September as well. So, but that remains bid. The 20-day to suggest that this rally's over is all the way down there at 3,570, and the 50-day is all the way down there at 3,434. So this gold market still remains very bid. Some could say it's overbought. If we just look at, if I put on a different layout, put on the stochastics, you can see it's been overbought here on the stochastic setup, all of this rally. So, but it's just shrugged that off, stuck to the outside of the Bollinger Band, and then it creeped in. So we've got this consolidation here, you see on the Bollinger Band, and there the stochastics crossed, and that was suggesting a short position. This is what this strategy would have done. As soon as it's touched this, ironically, the touch of the outside is there. So we're looking for a cross of the movement. So that actual system, if you were being very aggressive, actually it didn't cross there, it was there that day there. You would have gone short on this day there, so you'd have been stopped out probably because it's gone up. But the next move was that day there. So this strategy is short gold from the top there. You can see where the cross there, that was too early. In fact, it didn't actually happen on that day. It was the following. You see the significant move. So this strategy, this Bollinger Band mean reverting and stochastic strategy, were failed on its first short there. It's now short there. Next one before that hasn't touched the outside. So in fact, that was looking to go long, and there that hasn't triggered. And that hasn't triggered the outside, so that hasn't triggered. See, this is a mean reverting strategy. See, so it doesn't work when we've got a strong rally. So we've had that. If you'd bought that as it came out with the overbought area, oversold area, you would have, that would help you run up. And then if you'd sold this there like that as it's come out of the overbought area, we'll see. It's too early to say. But this strategy, if you'd automated it and put the rules in, it would now be short on gold from the 17th of September and it would have got filled around about 3,657 and short on an end day base, and just about in the money, I would say, at the moment, but not a massive and not a big risk on that, I would say, given this very, very, very strong rally we still got up. And the 20-day moving average, you can see there at 3,560. So it's still very much bid on the trend following strategies, but mean reverting stochastics and Bollinger Band strategies showing some sort of weakness. As far as today's concerned for gold, what's been going on today? Let's go to the hourly chart. Big short, that was yesterday. Another big down candle here yesterday at 2 o'clock. Didn't want to go much lower, so I'll support the low yesterday really through 3,640, 3,635. The wicks went as low as 3,628 at 2 o'clock on the data yesterday. And you see here we've moved up, but the 50-hour moving averages has survived this morning's attack and then this lunchtime's attack, and now we've come back down. So it's still weak. This parabolic SAR, though, this would have gone long here at 2 o'clock this morning. No, well, the cross happened there, and the parabolic SAR flipped not until then. So you would have got in there. Your stop loss would have been sort of just below that lot, I would guess. So you got in here on the hourly time frame. Stop loss down there. Target might have been that 50 period moving average to start off with. So you take some risk off now. It's come back down. If you'd moved your stop loss up to the entry candle, you'd have been stopped out, but it's had another go and it's rejected it. So and it's still long. I might be encouraged to close that and take the loss on that, because that's held and that's held again, and we're down in this current now, and there's no more real data to run that. So that move up has somewhat failed, given we've had a big old move down on the hourly time frame. So the hourly time frame today has that resistance at the 50-hour moving average. If we come down the time frames, 15-minute traders, short, that's the last short there. Yeah, so again, that's another one that hasn't played out quite. You would have got in there at the 50-day moving out, at the 50 period moving average at 3,650. It's gone down a tad, and then it's just not gone anywhere. So 15-minute trade is still short. And we're under the 50 period, so that's looking okay. We might fall away again, but if you look to the left, that's our next downside target, 3,643 to the downside. And the scalpers on the gold market got 5 minutes. Nice short there. That's worked a bit better. 11.20 added again there at 12.05. Down we go, and then we flip out and we're out there. There's but it's flattened. See the flat? That was enough to probably suggest the long. But by then, see what's happened there? We flipped around. See what's happened there? We flipped, and the parabolic SAR has gone above, not underneath, to go long. So that should be long, but the parabolic SAR has already flipped, so we're out. So we've got this nicely, and now we're just messing about. So stay away from it on that short-term basis. That gold, is that what that's telling me? So that's gold. I say still bid on the daily. There's a suggestion with our Bollinger Band and stochastic strategy that we may have been short from a couple of days ago from the top. But here the trend following still remains quite positive, although the parabolic SAR has flipped. So if indeed you'd got in here, again following the rules there on there, you'd have got in there here on the daily time frame. That would have been your entry. Let me just, so you've bought there, as it's, you see the cross was back there, parabolic SAR flipped there, so you've got in here at 3,385, and you would have got out there yesterday there at 3,644. So a massive, you captured all of that rally. It's very, very unusual. I mean, obviously the first break was there. That was still short, but that was the first cross confirmation. Actually, was it there? It's difficult to tell now. No, it didn't actually cross till there, and that was above the fit. So you might have, been a bit but you wouldn't have. Would you have got in there given that this was just sideways action? Been a bit risky. That was certainly a safer entry. Still wasn't above the area, but that was that area there through there, and then it followed through really nicely down the 2nd of September. So the end of August, it was looking pokey, and it's had a really good first 2 weeks of September, massive run up. But yeah, it would have got all of that just following the simple trend following strategy, and again, so sort of added to the selling really as lots of other indicators would have triggered. I say it's looking to perhaps go short. Parabolic SAR's already gone. So this strategy is waiting for this cross to happen. Don't try and jump ahead. Patience, 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 my friends. What I know a lot of people do when they see these daily time frames about to cross, what they do, and I was guilty of this many years ago, we go down the time frames to make it happen. So we go down the 4-hour time frame, you can see that it already has crossed. We've had this cross here. The parabolic SAR. The first one was here, but we were still moving up. So the 4-hour time frame, crossed there, but it's still, that moved down, but then we've moved back up. So we've moved up, and that's the cross there. So the 4-hour crossed there on the night of the 16th, like we were saying on that previous action. But you can see here the daily. These are the dots. So you can see the 4-hour would have gotten a bit earlier there. And it's gone under the 50. It's also happened to be when it's gone under the 50 period here. See on the 4-hour time frame. So we'd have gone a bit earlier there, and it's actually got out. You wouldn't. It's touched it, then it's closed under it here. The last couple of days. So this is this has been short from that position there. You'd have added to it on there. Again, you might have just pulled your stop loss a bit too tight and got stopped out. But that's still looking to go down, but you can see there's a great big consolidation zone as well. We need to break down if this is going to go back down here. This can hold, and then we go back up and back over 3,700 for gold. So it's still relatively well bid, although there are signs in these lower time frames, 4-hour, 1 hour, of a bit of weakness. But that's happened before in this huge rally. So anyway, let me leave you with that gold chart, and say next week I'm quite sure what I'm doing. I think we got a live trading for. Let me just check for you. I've got it on my phone here somewhere. On Monday morning. I like the Monday morning starts. Gets me out of bed nice and early. European Open. That's August. What date is it? It's the 22nd. Live trading workshop, the European Open. 7:30. I'll be with you. My time, 6:30 GMT for the European Open. We'll be trading the DAX and the FTSE and others. So I'll leave you with gold. Let's just go back to the DAX, which is what we're looking at for Monday morning. And this morning it was long and then it was short this morning. So that's the 4-hour time frames. So the 1-hour time frame. So there we are. It's sort of over its 50 hours. So it's biased to the upside since when was this? Yesterday morning. Yeah, yesterday morning. It's been positive. That's 3620. I don't know what that is, but this morning if we go down to the 5-minute time frame and zoom this up. There's the I've lost time. There's the 8 o'clock candle. No, sorry, that's the 7 o'clock candle I saw this morning. That's the 8 o'clock candle there. That huge one down. So this was long initially, then it's gone short, but then it's turned around really quickly. And there you go. There's a parabolic SAR crossing. The MACD signal line crossing there at 8:35. And the parabolic SAR didn't flip till 8:40. So you would have gone long here, trailed that up until the parabolic SAR flipped, and it didn't flip until here. So that would have been your out. So you'd have got that bit, but then that's saying short because we've flipped there again. You see that? So that was out. Then we go short 5 minutes later, and then it goes down, goes through the 50. So you add again there, and down, and again, but we give it back before it flips. So our second buy there, we lose out, and we get out there on that flip there. So we get that as profit, and we haven't crossed yet again, so we stay out. That's the next cross there, That one doesn't work out. Sorry, it's not there. It's there, right at the top of that move. But by now it's it's 11:40. It's not the middle of the. It's not the trading day. I would have been out of this earlier, sort of at 9:30. But that's not worked out. That's gone long there. It's gone against you. Then it's flipped again. It's flipped again. We haven't. So this is still long. So this is still long. Although if your stop loss had been down here, you'd have come back and it's. Sorry, what I'm saying is we're long here. Then we flip to above. So we'd have got out there. So that would have been a losing trade from there to there. But we've made it. All of that. We made all of that earlier. And it's still looking to go long. So again, because this hasn't crossed again, if you want to wait for the parabolic star to flip again, you'd have gone long here because the cross is back here. So now backwards, so a lot chopping around. So we go back with the system. The parabolic star's flipped again, so we go long there. Looked like we were going to buy again there because this is looking really good, wasn't it? Didn't happen. Came back down. And again, if we'd moved our stop loss up, it should have been down there. We might have moved it up there. Probably had it round about our entry, still didn't. So we would have added again there. So this one's nicely in the money again now. So we've got in here, we've got in here, and my stop loss now on this 5-minute DAX strategy would be there at the 50 period moving average and 25 minutes ahead of the US Open. So and where we go, back in the money. Few losing trade or two there, but winning trades this morning. And we're going to do all that again on Monday morning. So join me for the Open on Monday for the DAX. So I'll leave you with the NASDAQ. Still bid quite nicely ahead of the cash Open. So a bit of a move down in the Asian session and European session. We've had 5, what's that? 6, 1, 2, 3, 4, 5, 6, 7 consecutive positive candles so far, although parabolics are still above, looking to cross. That's looking to go long, isn't it? There, although we've been short. That's been short from there, and then got out there. So that's a losing short position. No, that would have then entered short again there. So that's flipped because that's looking to go short. There, it doesn't happen to there. That's interesting. You see, so that's the parabolic. You see the MACD cross from the blue from above to below the orange here at 8 o'clock last night. Trade this at those sort of times. The parabolic star didn't flip until 7 o'clock this morning. So you would have gone short right at the bottom of the market. So you'd have got in here short, and your stop loss would have been up here somewhere. So you'd been stopped out. So that would have been a losing trade. This is looking like much more likely as a positive upside trade, but we'll see. Given the fact, the other thing is we're way above our 50 period moving average, aren't we? So anyway, don't win them all, but there we go. NASDAQ 23,500 has been recovered here on our derivative chart. Cash market is about to open in 20 minutes. So take care, everyone. Have a great weekend. If you want to join the prop trade, it's very straightforward, very open, very transparent. Today is Friday. It's payday. Let me just bring in our say it's payday. It's payment day. Let's bring in our general chat area. There'll be loads of people getting paid today. Success stories people like to explain. There we are. These little numbers might seem little numbers there. Penny has just got his second payout from the proptrade.com, 2,400. Mishra, 267. We do this every week, guys. It builds up. This is his second payment as well, Suraj. So keep going. Ahmad in Canada, $390, 260, 120. Not massive numbers, but for individual traders, it all builds up. This was last week. Kumar, this is something like his 14th payment. Is that today? No, that was last 12th, wasn't it? That was a week or so last week. 19. I haven't seen Kumar yet today. Yeah, 14th SK. That's his 14th payment he's had from us. So anyway, I say it's Friday, it's payday. Not everybody does that. They don't want to blow their own trumpet. There we go. Ashu Trades talking about his 6th and another feedback. You get your feedback after your second successful payment. But from small acorns, guys, these few $100s, huge accounts can be made. These guys, Pranea and SK, are just a testament to that as well, as is Top G. So come and join us. It's very straightforward. There's a two-step program or a single-step program. The standard challenge remains the most popular, although lots of people now are starting to look at the Express challenge, and the $25,000 account is still the key one. $100,000. Doing a bit of promotions for $400. If you got $500, you can get $100,000 worth of equity. And if you're new to the prop trade, if you've not used this code before, new 25 gets you a monster 25% discount off the $4.95 fee. So that comes down way under $400. So $370 gets you $100,000 of equity. It allows you to trade significant lot sizes, but you still got to follow the same rules. It's only 8% target, 5% on the second step, and then it gets you $100,000 funded account. You trade that for a few days, minimum of 3 days. Ask for some of your winnings back. You get 80% of your winnings back. You got to apply for it by midnight on the Thursday. You get it paid Friday. It's as simple as that. It's clean as that. There's not a great deal of small print, but these are rules and conditions. It's very, very straightforward. Give it a go. If you're an experienced trader, if you're a new trader, either way, come and give it a go. It's very straightforward. There's no overnight fees. There's no holding fees. You can trade it at the weekend. You can trade the news if you don't want to. If you're obsessed about trading the news, that's what the Express and the Pro accounts give you. So one step is only. The Express is a one-step challenge, so the targets are a bit high. You've got to get a profit of 12%, no bigger than a 4% daily loss, and no bigger than a 3% loss on a particular trade idea. That means continue trading the same way, the same asset, the same indicators. But you can do that as long as you're losing more than 3%, and you're entering sort of within outside of 60 minutes of the same approach. So anyway, I say that's the only real caveat. 7% total loss on the account, 7%, 10% on your funded account. But obviously no target, and you get 80% back. And $100,000 account on a one step is still $371. So if you've got $500 kicking around, if you haven't got that amount, 25, 50,000, these are the sort of things you want to be starting with, and that's $130 for 25,000, and the 50,000 is $250 with a first-time user, 25% discount. So give it a go. You got nothing to lose. We're here. I'm here every day. Whether you like it or loathe it, we are here to help you. Okay, so take care. Have a great weekend. I will see you all again on Monday for the European Open, live from 6:30 for the European Open, the start of the final full trading week of September. So stay safe, be good.